So it has been 4 days since my last video, and in that time, Bitcoin has broken back underneath my support resistance line that was formed on the crash low of November the 21st last year. But it has held the $79,000 level and this double top here that Michael has been talking about in his recent videos. And price obviously has regained it in the weekend trading session. Now, it has been quite a volatile few hours where Bitcoin sold off pretty much back down to the lower trend line of my 4-hour channel that I've drawn since we saw our 67K fourth time breakout that I posted about over on YouTube. And we had a couple of false moves below it, but for the most part, we had a bit of an upwards grinding consolidation. We had this false dump pretty much in the Sunday night US session, Monday morning here in Australia. We had a very fast move up, which was literally, I think, over 3 times the average true range. Like before we had that crazy bar, the ATR was roughly, if I make this bigger, about $600 up to, $900 at extreme volatility periods where we saw our current local high. And this bar alone on the 4-hour was $2,170. So it would have been double the average true range of even the volatile periods. And for a weekend bar, it was well over triple. So definitely some volatility there. Now that bar has made a lower high right in the smart money zone from the high to low, and it has come back down and is currently consolidating above the 50% level and the trend line. So for now, this is potential reaccumulation. However, as Jason always says, when you start to get these volatile, huge bars, typically it means you're closer to a top than a low because distribution is loud, accumulation is quiet. So you can possibly think of it as smart money trying to wreck both the longs and the shorts before we get a true move. And you can just see that the long short ratio is balanced. Our liquidations are obviously biased towards the short side as price has been overall grinding up with higher lows. However, if I jump over to the maximum pain level, you can see we're pretty much in between two levels. I think we smacked the 82.2 level here earlier this morning. For me, at least, it's nearly lunchtime on Monday. So it has moved up slightly, but this long max pain level could potentially get tested. But please note, if it does get tested, it will be a breakdown of this support line down here as well. Let me just extend it a little bit. And that will probably open up the door to lower prices. This -1 standard deviation band at 77K is the first place I would expect some support, which lines up pretty well with this daily trend line drawn from the current low to the third higher low. I don't know how you would count that, but either way, having another quick look at market data, we can see the liquidation map is now, after this little pump up, now skewed towards the long side or price being below us. In other words, we should potentially see a move down because, well, we have a massive amount of longs built up in the last 90 days and potentially even the last 180 days. But I typically only look out to around 30 days, and you can see we got this nice cluster at 79K, which precedes this cluster at around 77K and then 75K. Meaning that if we do get a sell-off, unless some crazy news event happens, I do expect bounces off the 79k, 77k, and around the 74, 75k level, rather than a straight sell-off like what we saw through here. And I believe the only time we're going to get a straight sell-off like that is once we start to take out the range lows at around $64,000. I believe the next move down to 56k, 52k, 50k, whatever it ends up being, could potentially happen in just a few days. But any move down from here, I think will potentially take weeks, which is supported by my weekly analysis. Now, if you remember in my previous videos, I talked about how once price breaks out of this downtrend line in a bear market, we never see the -1 standard deviation or quite touch that trend line again. Instead, price will retest it from the overside, consolidate, and then the bull market begins. Meaning that we still have a bit of time left before we could see some crazy sell-offs, because if price were to make a lower low based on where that trend line is, you can see we would have to dump at least that last week of May or even the first week of June, potentially even the middle or end of June being more likely. So until then, we could, see another weekly downswing, maybe an upswing, some more consolidation. Because if we go back and look at the 2022 bear market, when we get our really strong bear market rally, we can actually rally right into the middle of this fair value band and test that moving average line, which currently sits at $85,925. So we could potentially see a downswing first, because we're now 6 weeks up, and if this week pushes over 83k, it will be 7 weeks up. And Bitcoin rarely does that even in a bull market, if you remember from my previous video, meaning that I do believe we will probably see a weekly downswing to make a higher low above $65,000 before we potentially test that mid $80,000 range again, before we start to see this final sell-off. Now, does that have to happen? Of course not, but the weekly stochastic RSI is pretty much maxed out. And you can see, even in a bull market, when that stochastic RSI maxes out on the weekly, typically that is the top or very close to the top. But the key but is a weekly downswing is not far away. So I do expect this week very likely will break below 78k, at least on a wicking basis. And over the next few weeks, I expect us to retest either the high $60,000s or low $70,000 range, which would line up with a lot of my trend lines and 50% levels here. Because remember, anything above 71.6 keeps us in the strong half of this consolidation range and keeps the door open for another test higher. Now, one thing to note is the USDT dominance is making a bullish divergence. Obviously, it is not confirmed yet. We'll need a couple more days to confirm that. But at the same time, Bitcoin is making a bearish divergence because price has moved higher on a closing basis, but the oscillator has made a lower high. And the BX Trender is also made a lower high. Remembering the BX Trender is a cross between a RSI and a MACD. And one more thing to note is volume has been pretty pitiful on this rally. You can see the size of the bars are very similar to the ones we saw over the last week or so. We can give it a bit of slack being a weekend session. So obviously price action in the next few hours or days is going to be very important. Now on this 1 hour time frame, you can see this recent pump hit pretty much exactly on that +1 standard deviation and pulled back to fair value. And on the 15-minute time frame, we did not manage to hit that 2x deviation, which does show, in my opinion, a little bit of weakness, because in a very strong market, Bitcoin can typically come up at least close to that 2x deviation band. And when we're starting to fall short of that 2x deviation band, it often means the rally is closer to being over than just beginning, if that makes sense. And that is just shown right here, where the move to $80,500 on the 4th of May, if I go back, right here, was a very strong move, high volume, you can see. Nice little breakout move, but as price grinded higher, it just did not have the same energy as it did before, and we kept coming down to test, close to the -1 deviation band, and obviously that resulted in a larger sell-off. Am I saying the local top is in? No, but I am saying that, if you remember from my previous video, this entire rally has just been weaker than the rally before it, because ever since we made that double top at 79.5, we have dropped back underneath this top trend line, and we've been hugging this lower trend line and been unable to break above that upper trend line. Now, if I extend that upper trend line a little bit right now, you can see for Bitcoin to get back into a very strong position, we would need to see price back above this +1 deviation on the 4-hour and the trend line at around 84.4. However, remembering that the +1 standard deviation band often marks local tops, meaning that this rally is running out of steam, and a much larger correction is probably due very, very soon. Let's take a quick look at the rest of the market data that I have. The FOMO Finder is back in uncertainty. Funding rates have gone positive. What happened? I think it's just updating. And again, I don't think the low is in, because we have not seen that days, weeks, even months where we've just seen panic, capitulation on the FOMO Finder. I feel we're in one of these bear flag periods with another leg down to go. Now, this week, there's not much super high volatility announcements, like high impact, if that makes sense. Obviously, CPI, Fed chair, PPI, retail sales can shake up the market a bit, but nothing like, FOMC or Trump speaking. Then again, Trump speaks whenever he wants, so... on the coin market cap, you can see Bitcoin is now above Tesla. I will probably cover this a bit more in a stock market update video that I'll push out maybe later today, maybe tomorrow. But it's crazy to see Nvidia back in that $5 trillion market cap, and Apple and Alphabet potentially approaching that $5 trillion mark as well. And if you remember Jason's long-ass videos that I love watching, in the later phase of the 18.6-year cycle, or not even that, I think the 4-year traditional bull market cycle, crypto can start to grind down whilst the S&P 500 continues to grind up, which is supported by the daily exchange volume. It is still pitiful. Fear and greed is back into neutral, so that means we could potentially have reset sentiment enough for another leg down. But obviously, the trend is your friend until the end when it bends. So until we see some actual breakdowns of trend lines and lower highs, or weekly swing breaks, the trend is still up. And that means we could potentially still be looking at this 382 level at around 83.9. Anyways, thank you all for watching. Please like, comment, and subscribe. And if you are trading, keep your eyes on that on those shorter term timeframes, because the volatility is getting pretty extreme right now. Goodbye.